To those of our viewers who may not have seen any of the previous editions of this program on the highlights of the meetings of the Monetary Policy Committee, MPC, of the Central Bank of Nigeria, CBN, the MPC is the highest policy-making committee of the Apex Bank. The committee drives the realization of the mandates of the CBN as well as the measures undertaken by it to provide support to the federal government towards the realization of its economic policy. The MPC is headed by the Governor of the Central Bank of Nigeria, and it meets bi-monthly. Good evening. My name is Chinemerem Joseph, and I welcome you to this edition of You and the Economy. We interrupt our ongoing mini-series reviewing the current status of the execution of the Lagos Free Zone project to bring you this edition on the highlights of the second meeting of the MPC of the CBN in year 2022, which took place on Monday, the 21st of March. It was the 284th edition of the meeting. Once again, and in line with its mandate, the MPC took decisions on all four key economic parameters that it deliberates upon at each of its meetings. These are the monetary policy rate, which is the MPR, or if you like, you call it the interest rate, the cash reserve ratio, which is the CRR, liquidity ratio, and asymmetric corridor. At the end of the meeting, the CBN Governor, Godwin Emefiele, addressed the media on its outcomes, particularly the major decisions taken by the committee. Here now is our report on that media briefing. It is the second Monetary Policy Committee meeting in 2022. The Governor of the Central Bank of Nigeria, Godwin Emefiele, leads other members of the committee once again to share details of issues they had deliberated on and also decisions taken.
Good afternoon, distinguished members of the press, ladies and gentlemen.
After the last meeting in January, geopolitical tensions have continued to mount, and the war between Russia and Ukraine has worsened, impacting the global economy negatively. As global macroeconomic uncertainties persist, the lingering energy issues in Nigeria is adding to inflationary pressure. The committee blames this on rising energy prices as a result of the current scarcity of petrol, increased cost of automotive gas oil, and also hike in electricity tariff.
The rise in core inflation was mostly due to rising energy prices as a result of the current scarcity of petroleum, premium motor spirit PMS, rise in the cost of automotive gas oil AGO, and hike in electricity tariff. Committee, however, expressed cautious optimism that with sustained interventions by the bank in various sectors of the economy and broad fiscal support to tame these legacy structural constraints, price developments will moderate as output growth improves. MPC therefore urged the fiscal authorities to seek innovative ways of addressing the current critical supply side challenges confronting the economy to enable the unhindered transmission of all the recently deployed fiscal and monetary stimulus to the real economy for good.
The Apex Bank remains upbeat about the performance of the economy following its sustained interventions in various sectors, but wants the government to take decisive steps to contain the situation affecting the cost of living and purchasing power of Nigerians.
The Monetary Policy Committee noted with concern the impact which the global price increase in petroleum and other products is having practically on all economies. Committee further noted that this has resulted in imported inflation on the Nigerian economy and believes that specific actions need to be taken to ensure that this trend does not continue, given the adverse consequences an aggressive rising price level could have on cost of living and purchasing power of Nigerians. Before the Russian-Ukraine war, MPC was optimistic that the moderate decline in inflation was sustainable due to the positive impact of good harvest on price levels. The MPC worries today that whereas global prices have gone up, this has been compounded by shortage of supply of petroleum products. In the short run, MPC urges NNPC to take urgent steps to ensure adequate supply of petroleum products in Nigeria so as to reduce the rate of arbitrary increase in price of these petroleum products by oil marketers.
Of concern to the committee has been the high rate of crude oil theft in recent time and its impact on government revenue and accretion to the national reserves. The committee also noted the declining level of global trade, especially the export of crude, which has impacted the country's external reserves, making it drop from $40.21 billion in January to $39.44 billion in March 2022.
Committee noted with grave concern the unprecedented rate of oil theft recorded in recent times and its debilitating impact on government revenue and accretion to reserve. In the medium term, MPC is hopeful that the proposed takeoff of the Dangote refinery in the course of the year would help to improve the supply of petroleum products in Nigeria. MPC also note that the rising price of diesel is compounded by the problem of inadequate electricity supply in Nigeria, which has adversely impacted domestic prices. MPC advises the CBN management and the fiscal authorities to take specific and urgent action to avoid many power generating stations shut down for turnaround maintenance, resulting in the current unwarranted shutdown of our generating assets.
At the end of the meeting, the committee resolved to retain the monetary policy rate at 11.5% with an asymmetric corridor of plus 100 minus 700 basis points around the MPR, cash reserve ratio at 27.5% and liquidity ratio at 30%.
The committee decided to adopt a hold stance as it would indicate a precautionary and consistent policy stance with the prevailing economic conditions, particularly as further economic and financial shock are exerted from the ongoing Russian-Ukraine war. On the strength of the above considerations, 3 members voted to raise MPR by 25 basis points, 1 member voted to raise MPR by 50 basis points, while 6 members voted to hold all parameters constant. The committee thus decided, in summary, MPC voted 1. to retain MPR at 11.5%, 2. retain the asymmetric corridor of plus 100 and minus 700 basis points around the MPR, and 3. retain CRR at 27.5%, and 4. retain the liquidity ratio at 30%.
The address of the CBN Governor was succeeded by a question and answer session in which he fielded questions from the media on some very critical issues.
My concern actually is still on the Russia-Ukrainian crisis. This has led to a bit of a spike in inflation across the globe. I want to know what MPC will do in specifics to help Nigeria's situation, because petrol and diesel is rising, and it has a very, very significant effect on the other parts of the economy. Thank you.
What are we doing
like we said again in the communique, we are concerned that, MPC was concerned that the inflation that we're seeing from the core side came primarily because of supply shortage. Because if you check primarily whether in Abuja, in Lagos, or most of the centers, there still remains fuel queue everywhere. So what you find is that because there's this fuel queue arising largely from supply shortages, there is arbitrary increase in prices by retail marketers because they are not sure whether they will get more diesel after they've sold their stock. In fact, they are pricing what they are holding based on their expectation of their replacement price. Somebody was saying yesterday when I was at a session that even the price of diesel had risen to almost about 700 or even 800 naira per liter. So what are we therefore saying? We will try as much as possible, and we were told at this meeting today by the representative of finance, the PAMSEC finance, that the Minister of Finance and then NPC are holding engagements to see to what can be done to make sure that adequate funding is provided so that petroleum products is made available, so that they can be imported, and then all our filling stations can have these products. We are also saying we'll be engaging in NPC as well. If there's any kind of intervention that we can provide to help it, make it easy for them to bring in these products so that this shortage can stop, then we will see that when supply increases and people are relatively confident that when they sell whatever they are holding in petrol or diesel stock, that they can easily go and replace them, then the arbitrary price increases will reduce. When arbitrary price reduces, of course, we can begin to see that there will be gradual moderation in the price of this product, which would ultimately result in the moderation in the prices of other products that whose prices would have gone up as a result of the arbitrary increase in the price of these items. The MPC also noted that because of the turnaround maintenance of most of our generating stations, right, power generating stations, that they had to shut down. Shutting down has resulted in what I read again from some circulars from some of the discos, that there was a shutdown, a collapse of the grid. Whereas that was the case, but it's just shortage because all the generating companies they're shut down, and because they're shut down, there is blackout, and when there's blackout, what you find is a lot of people go to buy diesel, and also the demand pressure puts pressure on prices, and then this is like a continuum. So what we're trying to say here is that the CBN has always been there to support the power sector. Like you all know, we've disbursed over 1.3 trillion naira in the last 5 years to support both the generators or discos, or to acquire equipment, or to buy meters, or to even improve what is being paid to electricity generating companies so that they can continue to pay for their gas, and then the system can continue to operate. Thirdly, to ensure that we're able to continue to moderate food prices, because what we find is that there are some external exogenous factors that are outside our control are coming from the impact of the Russia-Ukraine crisis. But if, for instance, that has resulted in pressure on core side of the inflation, so what we're saying is that on food, where we're seeing some moderation, that our development finance department should see what can be done to continue to aggressively make sure that we improve on our anchor borrower program, improve on all other programs that we have that is meant to boost agricultural output. If agricultural output in our various products are improved, what you will find is that we will see a further moderation in food inflation, which may help to dampen the effect of the rise in core, thereby moderating effectively at the headline inflation. So those are some of the things we'll be doing, and I believe that if these actions are taken, we are reasonably positive that inflation will come down. So that's the reason we said we must take deliberate and specific and urgent action to address the factors that were responsible or that have been responsible for the uptick in inflation and prices. And that we believe that if addressed, we will be able to see a solution to the rising prices in the country.
The just concluded IMF Article 4 consultation report, which urged the central bank to scale back on its credit intervention as they are likely to cause market distortions in the long run. And listening to you today, we are hearing the MPC ask the development finance to redouble its intervention, and you said monetary and fiscal stimulus will continue to remain in place until downside risks go down. So what exactly are your response to the IMF?
The truth is that International Monetary Fund, I have to admit, has been a great supporter as well as advisor to the Central Bank of Nigeria and to Nigeria, because it's important that we underscore the support that we have always received from the IMF. And now I will highlight two. In 2020, as a result of COVID, the IMF opened its vaults to all countries, particularly emerging markets, for us to draw on the RFI facility loan. Nigeria got the highest in Africa of almost $3.4 billion. It has helped us, aided us in resolving some of our problems, particularly during the period of COVID. In 2021, again, when they also saw, is it the second or third wave, IMF came up again and said, look, they were going to increase the special drawing rights, the SDR, and we also benefited to the tune of even above $3 billion. So have they been very helpful? I like to underscore it, that they have been extremely helpful to the countries that are working with them. I guess when you appreciate somebody for a good job, hopefully they will do more, even in 2022 and 2023. It's important that we reiterate the fact that the Central Bank of Nigeria remains a development finance-oriented central bank. And it is normal, it is very, very normal for an emerging market or developing economy to deploy development finance tools through interventions to support the growth of the economy. Let's not forget, about 2 years ago, monetary policy said that our new thrust will be price and monetary stability that is conducive to growth. If we are to adopt price and monetary stability that is conducive to growth in an environment where there is a tight fiscal space, where revenue shortfalls abound, and even government has to borrow, then I think it is just reasonable that central bank should step in to support the fiscal, to fill that space, not through grants, but through loans to our smallholder farmers, through loans to our small and medium enterprise businesses, through loans to our households, through loans to wake up our manufacturing industries that are dead. And I can say that in the last 2.5 years, we've done certainly more than 3 trillion naira, whether we like it or not. And IMF themselves agree that, for instance, the amount over 300 billion that we've disbursed to almost 1 million households helped to catalyze consumption expenditure that has helped Nigeria to turn positive in its GDP, even though GDP is still fragile and we still face vulnerabilities. IMF knows that even our intervention to the manufacturing sector is helping, And we have facts to show so. Aside from Ankobra program in agriculture, we've seen, was it last month, we went to Sokoto to launch a 3 million tons cement factory to increase manufacturing output in cement. Tomorrow, Mr. President will be going to Lagos to commission a $2.5 billion fertilizer plant. What will that do for us? The $2.5 billion fertilizer plant will result in additional 3 million tons of urea in the country. Indorama produces 3 million metric tons. Notori produces 500,000. That is 6.5 million metric tons per annum. Our annual consumption is 1 million. What does that mean? They will export. We will earn FX that will create liquidity in our I&A window and lead to less reliance on central bank for foreign exchange. So I think IMF themselves know this. They know that what we are doing, these interventions, are for good of the economy, are for good of the country. And I think they themselves know it. So I think, yes, if IMF says we will, it's an advice which we will take, but at this time, we are in a development finance mode where we must grow our economy, while at the same time, we're doing everything possible to make sure that our mandate of price and monetary stability still remains sacrosanct. These are very difficult choices, and it is important that people get to know that these are very difficult choices. It is very simple for us to sit down and do inflation, price, exchange rate, and we'll go. They were going below all this to look at what are the causative factors, and we're thinking of how to resolve them for the Nigerian economy and for the good of Nigerians. So I think IMF understands this. So when you say this, of course, as it's like an examiner. When an examiner comes, there must be an exception. So that's an exception report which we'll accept. We'll see how to work through it.
The President will be visiting Dangote petrochemical plant in Lagos tomorrow, and then inaugurate maize pyramids in Kaduna on Thursday. So what role is the CBN playing in all this?
What is important here is that the President said we need to diversify the economy. The President said let's produce what we eat and eat what we produce. By extension, where we have raw material, let us produce the raw material locally, and then rather than us importing them with scarce foreign exchange. What is the role of CBN? CBN is a lender in the sense that we contributed in funding the Naira project, and we also contributed in the providing FX for the importation of the equipment. The Dangote project is not just 2.5, just 2.5 billion, the fertilizer side that is being launched tomorrow or commissioned tomorrow. The total cost of those entire projects is about 17.5, which comprises the fertilizer, the petrochemical, and the refinery. $17.5 billion. You put these three together, the fertilizer, the refinery, as well as petrochemical. By the time these projects come on stream, hopefully by the end of the year, total, the three of them, will be saving more than 30% of what central bank would have spent importing these items into the country. So for us, it's a win-win because the country badly needs to diversify the base of its economy.
I would like to know the status of Infraco, the 15 trillion naira.
Infraco is set up, the board is running, MD has been appointed, asset managers have been appointed. We have currently 3 assets that are under finance. We've done some bridge finance of almost about 200 billion naira for that purpose. The remaining sums, the asset managers are going to be going into the data room to see the numbers, to determine viability of those roads, traffic counts, Lagos Ibadan, Abuja Kano Kaduna AKK project, as well as the second Niger bridge, which is almost completed now. So I'm sure we are only meant to complete the funding that federal government has put into it before now. And so we will do it. And the PAMSEC Finance, who also is assisting, at least in terms of collaboration between monetary and fiscal, also assured that there are pipelines of infrastructure projects that will be looked at. But of course, Infraco being an institution that looks at the commercial viability, will look at each of those projects, determine their commercial viability, determine particularly how will revenue be raised, realized, how will revenue be realized to fund those to repay the loans, and from there they will be done. So I believe we're on a fast mode, but 2022 will be a very, very aggressive year in the tenure of Infraco.
You're welcome back. We believe you found our report on the highlights of the 284th Monetary Policy Committee meeting informative. On that note, we draw the curtain on today's edition of the program. Please tune in again, same time next week for another edition of You and the Economy. Until then, it's bye for now.